How's it going, YouTube? My name is Ari and welcome to Blue Lion Finance, a channel dedicated to investing, which I created for all of you to simply follow my financial journey through the ups and the downs of the market swings. Now, speaking of market swings, it is officially official as of yesterday, June 13th, at the market's close. We entered into a bear market, completing a 20% decline. But hear me out here, it is not as bad as these fear-mongering news headlines are making it all out to be.
Stocks plunged Monday across the board, with the S&P 500 entering a new bear market as investors sold stocks amid worries that the Federal Reserve will need to be more aggressive to tame inflation, sparking fears it will trigger a recession.
Economy and to a drop on Wall Street today and new fears of a possible recession on the horizon. The Dow losing
Street, where stocks are down sharply in this last hour of trading. Take a look at that. We're almost at 775 down, well, nearly 780, right? The U.S., there are worries that the U.S. could be headed for a recession.
I think that, we clearly are in a bear market as of today. We've been actually in a bear market with the benefit of hindsight since January.
We're following some breaking news on Wall Street now, where the roller coaster ride is not over yet. Markets in a tailspin yet again today. Investors growing more fearful by the day that a recession could be on the horizon.
Yes, history says it will get worse before it gets better, but investors who dive into the throes of the market now and who have time on their side have an opportunity to profit very nicely come the long term. So in today's video, I want to get right to it in talking about what exactly a bear market is, what history can tell us about a bear market, and wrap us up optimistically in sharing what exactly you can jump into right now to benefit from all this market pandemonium. Before we get started, make sure you go ahead, tap on that thumbs up button, as it greatly helps me out in growing this channel and getting the word out there. And I absolutely love to have each and every one of you on this journey with me. So go ahead and subscribe to the channel while you're at it. Now, YouTube, let's go ahead and dive right in. Since 1929, the S&P 500 has experienced more than 24 bear markets. But wait a second, what exactly is a bear market? Great question, happy you asked, because we can define a bear market as a term used by Wall Street when an index like the S&P 500 or the Dow Jones falls by 20% or more from a recent high for a sustained period of time. Now, this year's declines have marked a quicker than average descent into bear market territory, and I'm not too surprised given all the conditions that are impacting us, from an ongoing pandemic, supply chain disruptions, surging inflation, all-out war between Russia and Ukraine. We have yet to catch a single break. It's been 111 trading days since the S&P index's record high back in January, and here we are. I mean, I'm afraid to say it, it may even get worse.
No! God, please, no! No!
S&P's average bear market peak decline at 36%, and again, taken at an average here, 50 to 52 trading days to truly bottom out, which means we have roughly 10 weeks of potential declines ahead of us. However, I can't necessarily read into the market's crystal ball, so if we're going to be going based off the past, we can look at 2008. The bear market was a decline of nearly 52% and lasted for a little over a year, and its rebound didn't quite last too long as we entered another bear market in 2009. More recently in 2020, for those of you who even dare to visit it, the bear market leveled itself out at 34% worth of a decline and only lasted for about a month. The point is, while history repeats itself, no two bear markets will ever exactly look the same, and that makes sense given we're always experiencing different market conditions in different contexts. Now, speaking to this go round, we are currently at the mercy of the Federal Reserve and how they're going to be responding to inflation that just popped above 8.6%, which, if they act too aggressively, could certainly tip us into a recession. We should also remain very wary of the war between Russia and Ukraine, because if it escalates, which it very well may, as Putin has been threatening the West to stop supplying arms to Ukraine, we are looking at an even more worst-case scenario. But nothing lasts forever, including bear markets, so for those of us who have the stomach for volatility and time on our hands to actually wait out the current market conditions, we're really looking at a massive opportunity to buy high quality stocks at steep discounts. I'm talking about bargain prices trading at 20% discounts. Now let's have a look. And taking a look at the tech sector, Apple is down from its 52-week high of $182, sitting now at $131 per share. It's a 28% change. Microsoft also down from its 52-week high of $349, now trading for $242. That's a whopping 30% change. Within the financial sector, JP Morgan was at a high of $172 per share at a 52-week high, now at $115 per share, creating a 33% change. How about T. Rowe Price, an investment management firm whose 52-week high was $224 per share and is now trading for $107 per share, a steal of a deal at a 52% change. Or how about a healthcare industry leader like Medtronic, developing medical technologies, that was flying high at $135 per share, now at $90 per share, creating a 33% change. Or even a play like Procter & Gamble, a safe consumer staples investment that has dropped from its 52-week high of $165 a share down to around $138 per share, making for a 16% change. And if those individual stocks are too risky for you, there's no reason why you can't dive into a top-of-the-line broad market fund like Vanguard's Total Stock Market Index Fund, which allows an investor to essentially buy the entire market, a fail-safe way to invest with a single share, allowing for an investor to be invested into over 4,000 companies, ranging from small, mid, and large caps, with a mixture of both growth and value investments from stocks like Apple, Microsoft, Amazon, Tesla, Google, Berkshire Hathaway, United Healthcare, and Johnson & Johnson, which, given it tracks the market, is down from its peak high of $244 per share, now trading at $187 per share. That's a 23% change. What a discount. Sure, the noise on the street is loud, and yes, the headlines could be daunting, but at the end of the day, what a bear market really means for us all, with money on the sideline and of course time on our side as well, a bear market is just an opportunity to be taken advantage of. Now, if you liked what you heard, you learned something new, or you care to just share how you're going about investing during this bear market, drop all those comments below. Keep in mind that I am not a financial advisor, so always just make sure you're doing your due diligence following my videos. Be sure to tap on that thumbs up button, as it greatly helps me out in growing this channel and getting the word out there. And be sure to subscribe to the channel while you're at it, because I'd love for each and every one of you to be on this journey with me. Now YouTube, until the next video, I will see you all there.